Welcome back to the Stock Estate, everyone, where we learn how to swing trade with risk management. Whew. Okay, the market this last week has been a bloodbath. Okay, I repeat, a bloodbath. Many stocks, okay, none was spared, okay, consumer discretionary, okay, tech, okay, all the retail stocks, everything was crushed, okay, the entire week, all ahead, okay. Monday was pretty bad, okay, everybody was thinking that, that it was going to be a nice bounce, but it didn't, okay. Tuesday was even worse, Thursday was bad as well, Friday was like a kind of a mid kind of bounce, but in the end, it kind of straightened out all the way. So, what can we learn from this? Okay, so again, this channel, right, is I would say it's more of an education and entertainment channel. So I do want you to take away a lot of lessons while you're learning, as an investor or a trader. So what are lessons that we can learn from this? Okay, so firstly, right, let me just refer back to one of my videos that I did last week. Okay, it is a tutorial. It's called Reading the Overall Markets, right? Which is over here. It's called Preparing for Pullbacks. Okay, and that video, right, I kind of mentioned a little bit about how the market is actually at an all-time high, and it's reaching at the upper band of the Bollinger Band. And when it's at that area, it tends to pull back a little bit more, right? And it's a little bit more wiser to start taking some profits, and converting them to cash to wait for, good buying opportunities. Okay, and it is not trying to say that, I predicted the market or anything, right? But it could very well rally higher. Okay, but in a sense, the week ago, right, after I posted the video, okay, the market went down, okay, and this serves as a good reminder, for those of you who watched my video, right, it was not super popular, it's one of my, I won't say it's my popular videos, there's 150 plus views, right, but those of you who actually watched it, I really hope you guys rebalanced your portfolio, okay, took some profits, okay, so that you have actually a good chance, to buy at the dips while everyone is actually panicking. So again, what destroys us as a good trader or investor, right, is all those emotions that's in, okay, when we are at 100% gain, 200% gain, we get even more greedy, okay, and we keep a lot of stocks still in play, right, and we refuse to pull out thinking that it will go on forever, even though we know that it is coming, right, we refuse to start to, reduce some positions, keep some in cash, even we know that, the danger is looming, okay, until it actually hits us, right, like last week, then it kind of shocks you and like, oh my god, I should have done that, but always, hindsight is always, you'll be like, I should have. So at that point in time, right, if you have actually pulled out everything, right, definitely you have been the biggest winner here because you can take advantage of the dips. But however, I would say if you did that, then you are a bad investor or a trader because you are really trying to time the market by pulling out everything. Okay, the market could have rallied higher and you would have missed out on a lot of gain. So again, you should have reduced, okay, or what we should have done is we should have reduced our positions. And so you can build a stable amount of cash to prepare for the coming week or for any dips, right? On dips like this, last week was crazy, right? It was a mid-sized correction as called out, in my video itself, a mid-sized correction, and hence we could take advantage of the dips. So right now, right, let's jump into the update about last week's video. So an update, right? First, I did talk about MRVL, EXEL, and MAXR in my last top 3 swing trade stocks video. And honestly, I'm very, very surprised by the results because 2 out of 3 of these trades, right, are winning trades, even though in a down market. Okay, we're still up a couple of percentages, and if you took profits, that's good. If you're still holding on to them, okay, still have a little bit more potential for the upside because the coming week, okay, I'm hoping for a nice bounce and a little short recovery to the upside for the Nasdaq as well as the Dow and S&P 500. So let's talk about MRVL first. Okay, MRVL, right, was the loser of last week. Okay, loser of last week because, okay, as you can see from the annotation over here, right, I called it out around this level, and I said that, if you buy this area, okay, we can swing up to the upside with a 4-to-1 risk to reward ratio. But in the end, the overall market conditions kind of pulled out, and you can see this area over here, right, I did draw an area over here. This is the stop loss that I drew. So again, in this case, okay, we got stopped out. If you actually played this, we got stopped out, okay, and we took our losses. Okay, so right now it's a dip even further down to the $46 level. Okay, and if you really want to play this, okay, you may want to play a bounce off the 100 moving average. Okay, but this was a loss. And this is actually a good lesson because you see, trades don't always go out the same way as we wanted it to. Okay, and we must in this kind of, especially this kind of, I would say, I won't say it's a bear market now, but in this a bearish kind of pullback market, right? Where swing trades are not likely to go so well, right? It is quite common where you get stopped out of the trades, okay, and you take the risk of 1, right, to 4. You take the loss, okay, but there's some people who know, which is what I did last time as well. Very easily we get emotional, right? Sometimes we feel that we don't put our stop losses. We just think that we exit manually, right? But sometimes our emotions get the better of us. And now instead of a 1 to 4 risk to rate ratio, if you didn't set a stop loss, right, you'll be a roughly almost 1 to 1 because you'll be equivalent amounts of loss as well. So this was a loss, but however, if you got stopped out, okay, it's not your fault. It's not your fault. You did your trade plan, you did your exit strategy, but this time you're just unlucky. Okay, you get exited out of a trade. And that's MRVL. Okay, let's talk about the winners now. Okay, the EXEL. Okay, EXEL, right? Okay, I called it out, okay, last week, right? Around here. Okay, it was around here, right? Around here. Okay, what happened was, right, I said, we have to wait for a nice little pullback to an area of value. Okay, and I remember I drew out the wedge, right? Let me just draw. Okay, I drew out a wedge pattern over here, and I said that if we can get it down to around the area of value, right, around here, okay, around here, right, it'll be a good buy. Okay, in a sense, okay, we did get a nice bounce, okay, up all the way to from here. If you bought in here, right, when it dipped down with the market, right, and it went up again, you have taken if you took your profits, you have taken at this resistance level, right. If you are very conservative, you've been I think around a 3% kind of bounce, okay, 3% pop. Okay, but however, 3% may not be a lot, right? But considering like the overall market conditions that this entire market has been in, right? It's pretty insane actually. It's gonna be pretty insane. It's actually pretty good because consider, okay, let me just give you one of the stocks as well, right? Like one of my favorite stocks, like API, right? Agora, right? Bang, okay, these kind of losses, holy, 50% loss, okay? A lot of the tech stocks, right, I'm pretty sure all got 40% losses, 30% losses the entire week. Okay, massive losses. Okay, if you look at those, right, it was absolutely crazy. A lot of them got crushed. But however, right, you still managed to be even if you didn't sell at this level, right, you're still holding, right? You will still be 1% up, okay, even after Friday's close. Okay, so you managed to keep a stable base, and because I think these companies have really a base business that they have on, and it's still quite undervalued and not grossly overvalued like most of the companies right there right now. So again, if you had got into this trade, okay, you didn't win, by considering this kind of market, it was a win overall. Okay, MXAR. Okay, MXAR was actually a win. Okay, and why do I say so? Okay, MXAR. Okay, I said to wait for a small little pullback, right? Back to the wedge level or the area of value around here, and it did. Okay, it dipped all the way down to $42 at one point, and if you enter the trade here like I did, right, and you actually got a nice spike up to the $50+ level. Okay, it was actually in one day. Okay, you see this level over here, right? Let's go down to the 1 hour time frame. Okay, let's see. Okay, so it was at market. I remember it was almost market open. Yes, market open, right? 9:30-ish, right? Then it spiked up all the way, 12% up. Okay, those of you who are in MXAR, right? It spiked up 12% up. It was crazy. Okay, then once it spiked 12% up, right? I knew this was going to reverse back down because it was all the way up out of the Bollinger Band already. Right? I was like, oh, it's probably going to reverse back down. And in a sense, I took a lot of my profits then, and it was a good swing trade, right, from $43 to $51. So that is around 20% pop itself. That's actually pretty good, okay, considering that the entire market was haywire. Right? Everybody was bleeding on the street. So this was a good swing trade overall. Okay, if you cut your positions, not bad. Okay, so but if you didn't, right, you missed it, right? Okay, you are right now it's still at $48. So if you bought in at around $44, you are still up, right, 5 to 10%. Pretty decent as well. Okay, pretty decent as well, considering the entire market conditions. All right, so these are the recap for the last top 3 swing trade stocks for the last week. Okay, so 2 winners, okay, 1 loser. Okay, we can't win everything, okay, but I think it was a pretty good trade overall. Okay, and last week, right, I also made another set of videos on the penny stocks, right, like a very small cap stocks and riskier stocks. Okay, so those stocks, right, most of them didn't work out because, right, again, I got stopped out of many of those trades because I decided to cut. Because penny stocks are super risky. You have to know how to be hardened, okay, and cut positions. Okay, I actually lost quite a bit of I took many stop losses on those, and actually lost quite a bit of capital on that. But no worries about that. Okay, it just eroded some of my gains. So in a sense, those gains that I have from MRVL, MXAR, EXEL, right, it is eroded by those gains. So you see, you can see nobody can win everything all the time. Okay, and the thing is, I was actually, you'll feel this kind of emotional urge in yourself. Like, I shouldn't have went in those trades, right? For me, also, I was like, if only I didn't go into those penny stocks. Right? Even for me, I've been swing trading for a while. Okay, I still feel that kind of feelings, right? But however, okay, my rational brain tells me, like I did everything right. Okay, it's just we were just unlucky. Okay, market decides to pull back very heavily on those. So luckily, I didn't position size my those swing trades very heavily. If not, I would have taken a huge loss. So I decided to go a little bit more heavy on the safer stocks because, as I said, I made the video on the market pullback, right? But I thought, maybe the pullback could happen a little bit more. I could do a shorter swing trade on those, but unfortunately, we got stopped out. So that's it, for the penny stocks video. Okay, so right now, let's go on to the top 3 swing trade stocks for this coming week. And I'm going to show you the first stock, which is actually, I kind of reviewed it a little bit to you guys already, which is the first one is actually API. Okay, API, right, is Agora Inc. Okay, Agora, right, Agora was it is a company, right, based in China, Shanghai, China, and I actually covered this stock, right, last time when I was making my 10th or 11th video, right, and I actually did extensive research on this company, okay, and I actually called it out, right, last time, right, when it was around the $39, $41 levels, okay, and one of my subscribers, I think he bought in, right, and it was actually a stroke of luck because I really didn't expect this huge pop due to the popularity of Clubhouse, right, which is one of the biggest things about when Elon Musk went into Clubhouse, then all the hype came into Clubhouse, and Agora, which is affiliated with Clubhouse, got a lot of gains, okay, and it spiked all the way from $41, right, all the way to a high of $114, which is around 3x, almost 3x my money, right? So that's insane. Okay, so congrats to that subscriber. Okay, so good job on that. But after that, right, okay, if you didn't take profits, right, okay, you have suffered a huge loss. Okay, huge loss all the way down, okay, to the support level over here, which is the 50 moving average. Okay, massive dip, okay, from a high of 114 all the way to 61, that's like 50% loss, okay, crazy, okay, really crazy. So let me give you why, right, I'm really liking Agora for an overreaction play, okay, what's an overreaction play? So if you don't want an overreaction play, go to my tutorial playlist, right, go to, let's see, tutorial playlist, let me show you, tutorial playlist. Okay, I have some videos on swing trading psychology, long-term investing tutorials, okay, swing trade tutorials, go to swing trade tutorials, right? Okay, and go to this one. Okay, this video over here. Okay, it's called overreaction tutorial. Okay, and I do go to the area over here, the timestamp, right, where it says tutorial on overreaction play. Okay, and this I actually like give you the full breakdown of what you're looking for. So for me, doing this top 3 swing trade stocks video, I'm not going to go in super in depth. I'm just going to glance through because this video is going to be like 40 minutes long. So yes, go and look at that. But basically API, right? Huge red bodied candles down, boom, all the way 4 days in a row, overreaction, okay, all the way down to a support level. That's number 2, into a 50 moving average, which is an area of value, okay, and you can see it from the RSI, right? RSI, which is the indicator over here, right? Right now is very oversold. Okay, anything under 40, in my opinion, is actually oversold itself. So right now, right, when it's at around 40 range, it is pretty oversold. So we can take advantage on that because when it mostly goes into an oversold range, like you can see historically from this, right, oversold 36 goes to overbought at 85, 87, 80-ish. So RSI, if you don't know what it is, okay, go Google it. Okay, I think it's a very useful indicator that could help you in your swing trading career. So second point, very oversold, right? Very oversold on the RSI. And around here, right, you'll be like, okay, where can I, like, should I just buy now? Should I buy now? You're asking, should I buy now? Answer is no. Okay, because, right, there's many stocks out here, right, there's actually way oversold already, okay? It's super way oversold, okay? They are pump all the way, like Fastly, a lot of other companies, okay? Just do a quick search, right, okay, on oversold, right, stocks, right? Workhorse, a lot of stocks all increase and decrease and destroyed, right, all the way downwards towards a level over here. But what you want to do, right, you don't want to catch a falling knife. You want to wait for some sort of a reversal, okay? So what do I mean by that? Okay, so what do we want, right, is, okay, let me draw out this a little bit lower. Okay, what do we want is we want something like okay, maybe a next, oh, it's pretty big over here. Okay, so, but basically, right, you want a nice little next candle above here. Okay, another candle that closed strongly above this level itself. Okay, then that'll be nice. That'll be nice. Okay, so this could stretch out. This 50 moving average could stretch out further. You want it to close strongly above this. But how do we, get more details on where to set a tighter stop loss and where to see? Okay, and this is where I'm going to teach you a golden tip. Okay, so imagine, right? Okay, you are walking in the streets, right? Then you see like a friend. You thought you see a friend from the behind, but you see like this silhouette. It's kind of familiar, right? And then you'd be like, I need more details, right? I need to see whether is it him or not. Then you shout, but I couldn't hear you. Then you run closer to him. Okay, then you go closer, then you see the details of the face and the back, then you be like, this is my friend, this is not my friend, right? Okay, so same thing for stocks itself, okay? So we're looking at it from the back, from a very far away view. Okay, now we want to zoom in a little bit closer. So what do I mean? Okay, from the 1 day time frame, right, we go over to the 1 hour time frame, which breaks it down to 24 candles. So one candle splits into 24. So we have something to, easier way to look at things. So right now, right, let me just clear my drawings, right? Okay, so same thing. Essentially, it's the same thing right now. You can see from just now, right? The high over here is 114. But right now, the lows over here is actually closed at $61. So, but right now, you can see so many other candles, right? So much more information. Okay, but then you tell me, hey, stocks here. So why don't you go like all the way to 1 minute? Okay, 15 minutes, 5 minutes, 2 minutes, 30 minutes. Okay, I mean that you can. Okay, but anything for me, anything lower than 1 hour, right, is too much noise. Okay, too much other candles, right? That disrupts your that's too much things to analyze, and also it's not needed because the 1 hour time frame is more than enough. Okay, as the lower point of view, okay, a smaller point of view, as a detailed point of view. Okay, it's like you don't need to go to your face, your friend's face, right, all the way in his face like this, right, like face to face to check to know that it's your friend, right? Okay, just a closer distance is enough. Okay, I guess that's a good analogy. Tell comment in sections below whether it's a good analogy. Okay, I find it pretty funny, but okay, yeah, but okay, back to the point, right? So right here, right, I can see it's a lower high. Okay, what do I mean by lower high? Okay, let me just draw it out for you. Okay, so you reach the high over here, right? Okay, then you get the high, lower high. Okay, lower high. Okay, lower high. Okay, and right now, right? Okay, it's a pivotal point right now. It's a pivotal point. Okay, what do I mean by pivotal point? Okay, so right now, right, it is working for a bounce. Okay, right now it's at this level, right, where it's like, I don't know, no idea where it's gonna go. Okay, so two things can happen over here. Okay, it can either break down to the lower downside, okay, or it can break to the higher upside. Okay, higher upside. So two ways you can do this. Okay, so if it breaks down to the further downside, right? Okay, oh, then that means it continued its lower high, lower low downtrend, right? Okay, but let me clear the drawings. Okay, let me clear. Okay, but however, right, if it breaks to the upside, so it starts consolidating and going upwards, right? Then it's a break of trend already. So it starts to have a what? Higher high and higher low. Okay, and that means there's actually a reversal of the trend itself. So this is where we need to start taking note. But do we want to enter on a higher high? Okay, no. Okay, just take a look over here, right? This is the what? This is the 20 moving average over here. Okay, it's gonna go over here, 20 moving average over here. Okay, so what I want to do is we're gonna see a nice little consolidation above, right? The higher high over here. Then what happened? Okay, then it starts to pull back a little bit on the support on this 20 moving average over here. Or we can use, okay, this last resistance turn support. Okay, last resistance turn support. Okay, so okay, if it pulls back down to this $62 level, right, it breaks above and pulls back down, and it shows signs, right? It shows signs that it is consolidating around this area. Ooh, okay, oops. Okay, it shows signs that it's consolidating near this area, right? And it's breaking up to the further upside. Then, I'll take a position around here to break towards the further upside. Okay, and that's for API itself. Okay, so now that I explained, right, the basis of how it works, right? How am I doing an overreaction play, right? This is going to be the same actually for the next two stocks that I'm actually talking about. So if you want to know how to do it again, right, I'm not going to go into detail in the next two stocks. So you're going to just take this as a reference for the next two stocks as well, because all three stocks I'm going to play this week, right, is actually an overreaction play. But those stocks I play, right, have strong fundamentals, and strong fundamentals, that means their business, right, have revenue, their sales. So in a sense, the fundamental factors supports this overreaction play. Okay, and it's also mentioned in my tutorial video, so go check that out as well. So fundamental business strong, so that there's even a fundamental support right at a certain level, because any lower than that is overvalued per se, and the market will realize that it's too overvalued and you will bounce back easier. So that's for API. Okay, next one is Beyond Meat. Okay, BYND. Okay, I actually talk about Beyond Meat. I want to take a very high position last time, right? When I was talking, it was around like $136 level, right? And I took a position. Okay, then after it ran up massively to 220, then it recently again, as with the market, everything died, so it came out to 144 again. So again, this stock is severely oversold. Okay, RSI is around 30, 33, very oversold. Okay, massive dips. Okay, huge red-bodied candles all the way to an area of value, which is where, which is okay. You can see that it's at over here. Okay, this red line over here is the 20 moving average, okay, and a lot of the lines actually converged around this area. So the next few days, right, again, will be very, very crucial. Okay, it dipped that down to the area of value, which is pretty good as well. So next one I'm going to check out, right, is actually, let's see, zooming down to the 1 hour time frame to check out more details. Same thing, okay, you can see that there's making what? It's making what? Okay, low, high, low, low, okay, again, high, high, low, 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 okay, low, high. So it's going on a downtrend, right? But right now, right, you can see suddenly there's a strong rejection. Okay, so again, right, see, it has already made its higher high over here, right? And a higher high over here. Okay, higher high over here. Then technically, right, it should actually break down to the further below. But however, you can see over here, right, this is called a bullish engulfing pattern. That means one red candle and followed by another big green candle instead. So that means there's strong buying pressure coming in to step into buy at this level. So again, right now, right, it's a crucial point. Okay, so it will depend on next few days, right? Don't enter at these prices yet, because don't FOMO into it, right? Don't FOMO into a stock itself, because you still want to see for a bounce, a confirmation. So what I can see is, okay, you can see there's a 20 moving average around here, right? See this yellow line over here, 20 moving average. Okay, so what I want to see again is you want it to bounce above, then consolidate and pull back on this line itself before taking a nice position. Same thing for Beyond Meat. And also Beyond Meat is a very good company that is prone to, grow for next few years to come as a leader in the plant-based industry, which I'm also quite bullish on. So, last stock, Invitae, NVTA Corporation. Okay, Invitae is another one which I actually called out last time, right? But it broke down to the further downside. Okay, you probably would have been stopped out of NVTA because overall market downtrend. But however, now I think it's a pretty good time to get back in, because right now it's going back to the area of value at the 200 moving average, okay, and RSI is even more oversold at 29, okay, severely oversold. And if you want to go down to the 1 hour time frame again, right, you can see, okay, this is actually even nicer, okay, even nicer. Why did I say that? Okay, let me just clear all the drawings, right? Okay, even nicer, because right now it has already showing signs of a reversal. Okay, so you can see over here, similar to Beyond Meat, right? Okay, similar to Beyond Meat. Okay, this candle over here, okay, bullish engulfing pattern, and it's already showing signs of an uptrend. Okay, but again, it's still below the 20 moving average over here. This yellow line, the 20 moving average. So what I want to do again is you want to wait for it to go up, okay, strongly, okay, have a nice pullback and show this it refusing to go below the 20 moving average, right? And we can start to take a position, because this may be a start of a new trend to swing it up all the way to what? The upside over here, which is quite long, okay, quite a bit of a distance over here, which is around, wow, I think that's a good, okay, from $40 to $50, that's a good 20% pop. Okay, and yeah, no, that's it for today's video. Okay, that's the top 3 swing trade stocks for this coming week. Okay, I'm looking for it. All of them, you have to really check the price movement and the overall market conditions for next week itself. So, the best advice I can give you right now, right, is sometimes not taking a trade is better than taking a trade. Okay, so again, if next week is a bloodbath, right, or everything is going down, right, you don't have to force yourself to take swing trades. That means like, I gotta trade something this week. No, like sometimes there's just not a lot of opportunities out there. Okay, except for a few. So don't need to force your trades. Okay, sometimes if really market's in the red, right? Okay, just close your eyes. Okay, just rest for the week. Okay, come back next week when the market's a little bit better, and when the market's in the favor for a swing trade, then you come back and make more trades and make more money. Then, okay, so everything will depend on next week itself. And if you really want to know more about some stocks that really do well in this kind of bear market, right, which goes against the trend, right, I may introduce some funds or ETF, right, that you can trade in this kind of bear markets in my next video. So I shall see you then again. Until then, stop, stay back.